Is it still morning? It is morning-ish. Yes, we got 15 minutes of the morning. Good morning, everybody. Day 2, Fireside Chat. I believe we're the second session of the day, are we? I think this is the second one. Is it? It's the second one. Yeah. Yeah, I know. Okay, so I guess we don't need much introductions about her, but just to start the Fireside Chat, again, I did this yesterday. I love to do this. How many of you here in the audience right now actually work in blockchain or crypto? Right? One. Okay, keep the hands up. Keep the hands up. Right? How many of you who actually work in the space actually own cryptocurrencies of any form whatsoever? I guess we've got nothing much to talk about if that's the case. I'm just kidding. All right. Yes, I think more people own crypto. Like, like just shout it out for us. Like, what do you guys own? Bitcoin, Ethereum? Just very quickly. Sorry? Exhibit. And then what else? Anybody else? Nobody owns Monero. I can't make any Monero. Oh, really? Really? Impressive. All right. Okay, I guess we're going to be talking about decentralized finance. We're going to be talking about the future and everything. But maybe before we do that, just for everybody's benefit, again, you run the Defiant weekly newsletter. What does that cover?
So it's a daily newsletter, and it covers decentralized finance.
All right.
So I'm writing a book on Ethereum.
All right.
As I was researching for this book, I realized the most interesting thing that's going on in blockchain is decentralized finance.
All right.
And nobody was paying attention. I mean, very few people are covering it, are writing about it, even know what it is or know what's going on.
Yep.
So once I finished my first draft of the book,
yep.
I decided, you know what, I'm gonna do it. I'm gonna cover this space,
all right.
Which is so interesting. And I thought, you know, I'll start with a daily newsletter. If there's not enough content to go in there, I'll cut it down to weekly. But I've been writing about decentralized finance almost every day for the past 5 months, which just, you know, tells you how much going on there is in this space.
And where do you get your content for the newsletter? Like, it's all over the web, or is it stuff you write yourself, or?
So, I mean, I get it from Reddit, like the Ethereum Reddit, from Twitter. Companies send me their kind of press releases. I'm always interviewing people, so they tell me what's going on. So.
All right. Let's narrow it down and jump right into it. Obviously, a big fan of decentralized finance, right? In your own words, when did you come across it? Why do you think it's important?
Okay, so so first, for many people who don't know what this is, decentralized finance are financial services and applications that are being built with blockchain technology. 90% of the space is happening on Ethereum, because Ethereum is a blockchain that allows for smart contracts.
Yep.
And that, you know, Turing complete programming language, which is crucial to develop these more complicated financial contracts. And so what these programs allow, these smart contracts allow, is to really cut down the number of intermediaries. So it really does allow for this cypherpunk vision of a peer-to-peer banking system. So what I think is interesting is, you know, Bitcoin kind of provided the first step in crypto, which was getting value from point A to point B. But because of the way Bitcoin is structured, which is deliberately simple, it doesn't allow for much more than that. With Ethereum, you can go further. You can lend, borrow, issue, trade, you know, issue and trade derivatives. You can do all of the complicated, you know, structures and services that you have in the traditional financial world, but cutting down, you know, to seconds, cutting down fees, not having to give away your information, not having to give away your funds. So it's putting control of funds and information back in the hands of users. You don't have to give away anything to a third party. And it's making it global. So it's increasing access to all these financial products for anyone in the world. So for example, someone in Argentina can start trading a derivative of a US stock. Like, you know, if you're in Argentina, you can't buy Tesla stock.
Yep.
You'd have to have a US, you know, brokerage account, and it's really complicated. Now with DeFi, you can, because, you know, there's different like synthetic assets that you can get exposure to, all like global assets that you couldn't before. And that's just one example of this, what this world is allowing. So it's really exciting. There's actual value being transacted. So I think what drove me into this space covering Ethereum is that, you know, we saw kind of the crypto boom and bust, and how ICOs really kind of brought a bad name to the space. Tons of scams, nothing worked. Everyone was just raising money and running off with it. No actual use cases, Ethereum breaking down because it was getting jammed up and all of that. But now, like, we're seeing, you know, there's actual value being delivered. You know, there's actual users, very, very few, and it's all, you know, still the users are very speculative. Use cases are much more leaning towards speculative use cases. But still, I mean, use cases are picking up, so and real value is getting transacted.
You're a very big fan of its potential.
Yeah.
Can I say that? And if we were to just break it down, and we'll want the audience to discuss this later as well, what needs to be done in your personal view? And you're writing a book about Ethereum, right? And I'm assuming it's going to be covered, but what needs to be done for that potential to be realized?
Yeah. So, okay, so
like just based what you've seen in the last 2 years, what's like, if I can take a few points and just put it down into actual working segments, what needs to be achieved for the potential to be realized?
So I think different things need to happen. One part of it is just like technological pieces that are missing. The big one, I think, is identity, like trustless, decentralized identity. Because right now, the way most of these platforms are working is based on collateral.
Yep.
So the way that these platforms get around having to do KYC, AML, and really have it be peer-to-peer and trustless is requiring users to put up collateral to participate in these systems. So for example, for me to borrow, I would have to put up assets as collateral, and the system, you know, and you can borrow assets in minutes without having to give up any information. It's just a smart contract doing this. But you need assets. So people put up 150 Ether, they get 100 DAI, which is a stable coin, and they use that DAI to speculate, to buy more crypto. So it's basically acting as like a leverage long trade.
Yep.
On the other side of that, there's the lender who is getting the interest rate that borrower is paying. And because he's a speculative user, he's paying a high interest rate. So that means, you know, it's giving access to anyone in the world to earn pretty high interest. Of course, these platforms are super risky, and that's why the interest rate is so high. But it's still giving the potential for, you know, people in developed countries whose bank accounts give them, you know, close to 0% interest, the possibility to earn dollar-based, you know, close to 10% interest. So the technological piece missing there is an identity system that doesn't require the borrower to put up so much collateral.
Is anybody you know developing such identity systems, as an example?
Yeah, they are, but they haven't really kind of cracked the way to do it in a trustless manner. so that they can work with these systems. But I think that will be the bigger step forward, because right now, as I said, for one side of the coin, for the borrower side, the users are speculators. For that to go into like a broader audience and use case, and have it be non-speculative and just someone who wants to go and buy a house or buy a car, and not have to put up collateral, then you need kind of this missing piece. Beyond that, kind of in the base layer of the system, which is Ethereum, of course, we need Ethereum to be more scalable.
Yes.
To have more transactions per second. Right now, it hasn't been a huge issue for DeFi, because some are using layer 2 solutions, and there aren't as many users, and transaction sizes are big, but they aren't very frequent, so it doesn't kind of clog up the network. So it hasn't been a huge problem. But if you really want this to be, an actual financial system that's global for the world, you need a more scalable layer 1. And I mean, that's hopefully coming with Ethereum 2.0.
POS, basically.
So yeah, I think there are important pieces missing. Regulatory, of course, is another one. Even though these platforms want to kind of avoid, the point is to have a peer-to-peer system that's decentralized, that doesn't depend on any jurisdiction. The reality is, if it really starts to threaten the banking system and financial system, regulators will find a way to crack down. So I think that's another kind of question there. They haven't yet.
I do feel that regulations, it's kind of like, to use a very Star Wars example, it's always a balance of the force. I think the space requires regulations. I think it does not. I think things like the FATF is a little bit of a knee-jerk loaded gun thing. Obviously, the FATF is not regulations, right? It's just recommendations. But the whole cryptocurrency narrative that the FATF has recently put out, and they've applied a lot of banking inspired regulations on cryptocurrencies, right? A lot of people say that it's actually going to hinder the growth in the industry, and Ethereum is obviously going to be part of that.
Yeah.
Do you have anything to say about that?
I think regulatory clarity is key for the industry to grow. I think the industry is so new that regulators are still kind of grappling with how to deal with it.
Is it partly because you feel that maybe us as an industry, we have not done enough to educate the regulators? Because the reason I say that is, so I'm from Singapore, right? For those of you who don't know, 70% of us look like this in Singapore. But anyway, like the central bank in Singapore, MAS, Monetary Authority of Singapore, very good understanding of the potentials. They obviously are going to be regulatory updates in April next year. But right now, they are taking the lead when it comes to experimenting with what just blockchain as a whole can do, right? That's one example. Another example is, I guess most of the people who raised their hands just now, you definitely know of Hyperledger. They've got like what, 13, 15 different type of products besides the Hyperledger Fabric. It's probably the most famous one. But the Hyperledger, because it's open source, it's already being used and experimented by multiple banks in China, for example. So what I'm saying here is that there is testing going on. There is actual real world, call it guinea pig testing if you want to. Actual testing, trying to figure out how it works and everything. You're based in New York, right? Do you see that happening in the US in comparison to that?
What do you mean?
Like in the US, right? Like all this, I mean, when it comes to regulations, right? A lot of people look at what the US is doing first, right? Do you see any of the, when you talk about regulations, do you see any potential changes that will happen, say, in the next 6 months to a year or something like that with regards to looking at the space? Because we both agree regulations is necessary, right? And I think regulations is good for the space, right? Obviously not hard-handed regulations, but some form of framework so everybody knows where we stand.
I think just having a clear framework is what's needed. I think the U.S. has been, you know, one of the toughest countries to establish a cryptocurrency company. From a tax perspective, it's really inconvenient. Like every time you spend crypto, it's taxable. So all of those things, you know, make it have made it really hard. I mean, they've made it kind of clear that if you issue a digital token, that's probably a security, but they haven't said exactly when it is. So that kind of gray area hasn't helped either. They've said Ether and Bitcoin are commodities, but they haven't kind of said anything about the rest of the cryptocurrency space and which are securities, which aren't. And so you know, I think they're really doing a disfavor to the innovation in the US, and we've seen many crypto companies avoid it and, you know, start doing things in Europe instead, for example. Like Coinbase was just here. There's a reason why they issued their debit card in Europe and not in the US, even though their headquarters in California. So it just shows you that, you know, stringent crypto regulation is driving away innovation and it's driving away companies from the US.
There's still some people that try to thrive under the existing US framework, right? I mean, correct me if I'm wrong, but like companies like the Winklevoss's Gemini, for example.
Yeah, but they've been trying to get their ETF approved since 2013.
Since forever.
2013.
Yes.
So, I mean, it just shows you. But, and I think that's kind of the point of decentralized finance. That you don't have to care about regulators. Or at least that's kind of their goal. That these platforms are really so decentralized, and they're putting all of the control on the user. They're not holding users' funds. They're not holding users' data. All of that they're providing is kind of an interface.
Yes, correct.
For users to access
it's peer-to-peer. The question is, can users be trusted? Can the users, from a peer-to-peer perspective, do you think they can be trusted with holding their own? That means without a framework.
Yeah. I think it's a great point, and it's something else that's kind of missing for this to get to the mainstream is you know, making it safer, because it's great to custody your own funds. You don't need to trust a sketchy crypto exchange with it, but you need to trust yourself.
Are we going to mention examples of sketchy crypto exchanges?
I'd rather not, but you all know who they are.
I don't. I just run blockchain conferences. I don't know.
Okay, sure.
Anything. Yeah.
But yeah, users need to trust themselves to kind of, you know, remember their phrase.
Is that really a good idea? Is that really a good idea? Like encouraging self-trust. I mean, we as human beings anywhere in the world, whether we know it or not, we live. And look, I'm a fan of the cypherpunk movement and everything, but we all grew up in some sort of framework. Obviously, depending on where we're all from, that framework differs from wherever we are. And whether we know or not, subconsciously, we're already in a framework. And now we're putting the responsibilities on the individual self. Are we ready for something like this?
So there are different tools to make it safer. You know, there are non-custodial wallets that offer services for, you know, restoring your private keys.
Yes.
So yeah, there are, you know, steps for you to be able to hold your funds without having to risk kind of forgetting your keys and losing them, or like dying and your family not being able to access your wallet. So there are different services for these cases. So I think more and more the space is trying to look like traditional finance, trying to look more like Web 2, with these kind of bridges for users in between. So I think it is getting a lot more user-friendly. But the whole point of you being in control is, you kind of see the importance of having these tools in places where authorities and banks really can't be trusted. So it's always harder, I think, for people in developed countries where everything works to get kind of what the value is. But I lived in Argentina for 5 years. And I saw firsthand how the government can one day say, you know what, you can't buy dollars. And it was just that simple. I was earning my salary in pesos. Inflation was 25%. So I was immediately, as soon as I got my pesos, I bought dollars. I had a dollar bank account. One day the government
Dollars
said...
in US dollar bank account.
US dollar bank account. It was a simple transfer online from my bank account. One day the government said, you can't buy dollars. I go into my bank account, and my dollar account there's not the option to do the transfer anymore. So I'm stuck with dollars at 25, with pesos at 25% inflation. Which means that, I'm losing value. If I go to the black market, it's a much higher rate, etc. So having control of your funds and being able to buy a stable coin that earns interest, dollar-based interest, in these platforms without having a government or bank tell you that you can't is incredibly important for much of the developing world.
But a government could tell you, officially speaking, that you can't buy stablecoins as well.
But how can they stop you?
There are ways. Let's just plan the framework right now, right? Like, they could, right? And I'm not saying that they can't stop you, right? But I'm saying, it discourages adoption.
In Argentina, I saw how people were buying Bitcoin at the time in 2013 when there was no DeFi.
Yep.
They were buying Bitcoin because of this reason.
Yes.
And there is no actual way they can stop you. You can buy Bitcoin peer-to-peer.
Yes.
You
like
know?
OTC desks, basically.
Yeah. So it's incredible in a world where, one, you have big corporations selling your data to be in control of your own data.
Yep.
And two, in a world where central banks are increasingly printing money and devaluing their own currencies to be in control of your own funds. I think that's kind of the basic use cases for DeFi. And from there on, you start building on just providing a more seamless experience with financial services, so that it can actually be an internet of value. So it can actually be, sending money can be as easy as sending a WhatsApp message across the world, which is, we're still really far from in the traditional banking system, but it's happening in DeFi right now.
So 6 minutes, I want to ask the audience questions, but very quickly, just to summary before we start asking the audience for questions. We've seen a lot of progress in the space. We have. Obviously, you're a very big fan of the space as well. But what can we expect to see in 2020? And will we write? Is that going to be included in the book as well? Like, what are your wishes, and what do you potentially hope to see happen in 2020?
Well,
just
yes.
3 points.
Okay, so first, the most exciting thing about 2020 is my book coming out in June on Ethereum. And for DeFi, I really hope to see more steps for user security, like for being able to ensure funds is one thing. And the second thing, hopefully what I was talking about earlier, kind of that missing identity piece.
Okay.
Hopefully, I think the space is pretty close to improving on those two aspects.
And what is the one thing that the industry needs to do to garner more interest? What do you think? Is there something the industry collectively, right, we can do to garner more interest and use cases, and essentially more faith slash trust slash belief in what we do.
Yeah. I think in the end, people are driven by the possibility of making money, and it's as simple as that. So if you have a way to earn, dollar-based interest, but the key there is making it easy to use and safe to use, which, right now it's not in DeFi.
Yes.
So I think that's what needs to happen. It needs to be, first, there needs to be more awareness. I think most people have no idea that this is going on. And second, it needs to be safer and easier to use. I mean, just still getting from dollars to DAI, it takes too many steps. So those need to be
Resolved.
For
And
there to
do you
more
think it'll be
use.
resolved in 2020? Or do you
I think
think,
so.
or do you think we're going to need
I
2030?
think this. I mean, just in 1 year, there's been so much development.
Agreed.
That I can't imagine what's going to happen next year.
I think 2020 will be, I think we can agree on that. I think 2020 will be a year of evolution. It'll be pretty interesting as well. Right? I think we've got time for a couple of questions. That guy's fast. He's been waiting like forever. Roland. Oh boy.
Oh boy.
Yeah.
Thank you for that sharing, Camila. So we talked a lot about the adoption of DeFi from the user side of it. Financial products also serve as a great revenue stream for governments when it comes to taxation of these financial products. Love to hear where is the development on the taxation framework. Once financial products are decentralized, there's no provenance, origination about where these products come from. How will that taxation work, and are conversations also being had on that topic? Thank you.
Yeah. So for DeFi specifically, because the whole ecosystem is self-contained and it's all crypto to crypto, so the taxation happens when you move your crypto into fiat money. So in that sense, DeFi use is taxed in the same way that any crypto use is taxed. As soon as you cash out your crypto, you're taxed on those gains. But while you're using crypto in that self-contained DeFi ecosystem, you're not taxed on kind of crypto movements. You're only taxed when you move that into fiat. And it just works, it doesn't have a specific treatment. It's just like buying or selling crypto normally. Yeah.
Okay. Any more questions? Gentleman right in front here.
Thank you. I actually have two questions. The first one would be about your statement when you wanted to purchase US dollars with pesos and vice versa, and you weren't able to do that. If you're targeting stable coins, actually the stable coins are stable because they are tied to a fiat to fiat currency, and the currency is actually stable because the monetary politics of the government that runs that currency is somehow stable because they are controlling the inflation and deflation. And basically, if you are wanting dollars, that actually means that you are trusting US government more than Argentinian government, for example. And this somehow contradicts your statement that you want to be in full control of your decisions. How do you comment on that?
Actually, so the DAI stablecoin that's on Ethereum, that stablecoin isn't backed by fiat. That stablecoin is backed by Ether. So the way it works is to issue one DAI, you have to put Ether as collateral. So the whole system is over collateralized with Ether, and it is pegged to the value of $1 US, but it's not fiat backed, it's crypto backed.
Yeah, but Ether is not stable. It has volatility, just like Bitcoin and other.
No,
So-
DAI is stable. It's tied to $1,
Okay.
to the value of $1.
And my next question it refers to your statement that.
Oh, sorry, you were saying Ether isn't, yeah, Ether is super volatile. That's why it's over collateralized to make sure that the system maintains its value. So yeah, that's how it works. And if, if Ether drops to a level, to a certain threshold, then it needs to be topped off with more Ether. Is how the system maintains its stability, so that I can always be worth $1.
Okay, but if value of dollar changes, then the value of that coin also changes. Just like, and the value of dollar is actually controlled by the monetary policy of the US government.
So it's controlled by holders of the MakerDAO system, which issue DAI, are the ones voting on monetary policy. So you don't need to trust a centralized, company managing the system. It's actually the users, the whole of the MakerDAO community, who are voting for the monetary policy. So it is truly decentralized.
Okay, thank you. And the second question about your statement that cryptocurrency is currently not yet widely used because nobody has solved the trustless identity verification. This made me thinking, and I would like to ask you, how would you define identity?
Well, it's a tough question, but I think in an ideal world, what should happen is that you would have a way to prove to whatever service that you're using, whatever that service needs to know, and not more. So maybe there will be a system where I can upload all my salary, my financial information, my health information, but that I'm in control of it, and nobody has access to it. Maybe it's encrypted in a way that I'm able to, for example, if I go to the doctor, I can show them my health history, but nothing else. Like, they don't need to know my social security number, they don't need to know my banking information. All they have to do is, decrypt the part of my identity that relates to my health, and that's it. And same with my bank. If I want to get a loan, maybe I can go with this identity service and show them, just only the pieces of information that they need, so that they can know that I'm creditworthy and give me a loan.
Basically, what she's saying is that what we really need in the space is, imagine if you know what you know and you don't know what you don't know, and you only know what you don't know when you need to know. It sounds a bit confusing, but that's essentially what we are trying to achieve when you talk about identity, just to answer your question, by the way, right? We're out of time, unfortunately. Thank you, everybody. Thank you, people, for listening. Once again, Gabriel from Block Show, based in Singapore. Come talk to me. Camila's got a book coming up. I sound like David Letterman right now. Thank you, everybody. Have a great day for day 2. Thank you.